Fed vows unconditional inflation conflict, says gentle landing nonetheless feasible. The Federal Reserve, fresh from its biggest hobby charge hike in greater than 1/4 of a century, signaled on Friday it'll not allow whatever stand inside the way of its conflict to carry down the searing inflation it is punishing American households. The committee's dedication to restoring fee balance, which is essential for sustaining a strong labor market, is unconditional, the Fed stated in its twice-yearly monetary coverage report to Congress, relating to the U.S. important banks rate-setting Federal Open Market Committee. Fed Chair Jerome Powell will testify in Congress next week, updating lawmakers on the Fed's plans to fight 40-year excessive inflation whilst additionally pursuing maximum employment, its two from time to time conflicting jobs. The valuable financial institution on Wednesday raised the variety for its coverage price by way of 75 basis points to 1.50 pages C1, 75%, and published forecasts showing maximum policymakers assist lifting borrowing fees in addition this 12 months to perhaps 3-4%, and better in 2023. Economists say such sharp will increase should spark a recession. The report's use of the word unconditional indicates that the Fed is inclined to hazard simply that so as to keep away from what it sees as a miles worse state of affairs in which inflation receives out of manage and exerts a ways extra damaging long-term damage. On Friday, the first day that Fed regulations allow any policymaker aside from Powell to publicly air their views following a policy meeting, St. Louis Fed President James Bullard said he believes both the Fed and the European Central Bank might be capable of keep away from inflicting a deep recession with their rate hikes. The Fed and the ECB have large credibility, suggesting that a smooth landing is possible in the US and the Euro location if the post-pandemic regime shift is executed nicely, Bullard stated at the Barcelona School of Economics Summer Forum. That's unique, he referred to, from what passed off the closing time the Fed fought inflation at these stages, below former Fed Chair Paul Volcker in the 1980s. Volcker's competitive tightening caused no longer one but recessions. The Volcker disinflation was expensive, but it turned into now not credible to begin with. Volcker had to earn credibility, stated Bullard, who has been a vocal backer of the more and more competitive movements the Fed has taken because March, when it raised its benchmark overnight hobby rate by way of 0.25 percentage point, and observed that up with a 0.5 percentage point boom in May and the 75 basis point hike on Wednesday. Prudent strategy, Minneapolis Fed President Neil Kashkari, in an essay posted on the regional financial institution's website, stated he supported this week's fee selection and could support some other similar-sized hike in July, however said the Fed should be careful about doing too much too rapid. A prudent strategy might be, after the July assembly, to simply maintain with 50 basis point hikes till inflation is properly on its manner down to 2%, Kashkari stated. Taking a constant method to writing lengthy real quotes better might help us avoid tightening extra than is vital to restore charge stability, whilst making sure that we do sufficient. Powell in advance this week said in July policymakers will likely be selecting among a half-point hike or another 75 basis point one, however stated such larger hikes might not be commonplace. Traders in futures tied to the Fed's coverage price are currently pricing in a year-end variety of 3-5%, 3-75%, which equates to a median growth of 50 foundation factors at every of the Fed's closing 4 meetings this 12 months. One issue dealing with the Fed is that among the elements riding inflation, and will determine the strength of the labor marketplace going forward, are past the important financial institutions manage. Further dangers to international supply chains abound, the Fed noted inside the semi-annual financial policy report, underscoring that sentiment. Still, the hard work marketplace stays robust, with unemployment at 3.6%, giving the economy what policymakers hope is a few buffer against the pain of growing hobby fees. Fed policymakers on Wednesday projected unemployment rising to 4.1% by way of 2024, as increase slows to 1.9% and inflation falls to 2.2%. A state of affairs, Powell stated, would be hard to acquire, however represents a softish landing. On Friday, the New York Fed published consequences from an economic model that it uses for its very own forecasting that suggests possibilities of a difficult landing defined as one region over the subsequent 10 where GDP shrinks through at least 1% or about 80%.